partnership accounts, specifically the final accounts of these two lectures. In this lecture, and that is, of course, our third session, we are going to discuss the dynamics of error corrections and suspense accounts, right? So I want you guys to stay tuned and let's discuss this topic intuitively and know how to tackle questions on this topic. So usually in our normal life, we are all bound to what makes mistakes. And when the funny thing is that when these mistakes happen in our lives, there is always a way that we need to take to correct these errors. So take for instance, if you are a Muslim or a Christian and you commit a sin or you make yourself dirty, such that you do something that your deity or your God does not like, you need to go through some processes to cleanse yourself before your deity. In the same way as a business or an accountant, when you make mistake, there is always a way that you can also go through to correct those errors committed, right? So that is the dynamics. That is the main reason why we are coming towards study these particular errors, right? But mind you, there are some errors when you commit, it will not make your trial balance agree. No. It will not agree. But yes, so we also have those errors when you commit, your trial balance will still agree. So sometimes you hear many of these business students doing business that their accounts are for balance and they are happy, they are excited, and you will not understand. It brings some excitement to them because it is not easy to balance your accounts as an accountant. It is never easy. But the funny aspect is that even though the accounts are balanced, all right, you don't know whether they have made wrong or they have made some mistakes in their preparation of their accounts or not. You don't know. So this lecture will, bring you to help you to identify those mistakes that when you commit, you can be able to balance your accounts, and as if you have done all the things correctly, have done all the recordings and the postings and the what have you perfectly, right? So this lecture will help you to understand the dynamics of those, things that we usually encounter as business people, right? So if that's the case, what then is an error? What then is an error? Basically, an error is a mistake, an unintentional act that leads towards a mistake. in the preparation of our accounts. So that is the simplest meaning of what? An error, an unintentional act that leads towards a mistake. An error is different from fraud. Error, you are not aware of the mistake that you have done or you have committed. But when you say fraud, you know, you are aware it is intentional acts that you do to, steal something or gain something for your personal or your private words gain. You get it? So that one is what? An intentional act. But error in this content relating to this particular topic is an unintentional what? Act. So that is the meaning of what? An error. So an error is an unintentional act which leads to a mistake. So that's the meaning of what? An error. The simplest meaning of an error. An unintentional act that leads to a mistake. And we also have different types of errors. A lot, a host of them. And these errors have been classified into two broad types. And these types are, so there are two what types of error, two broad classifications of what? Error. So the two types of errors are: one, we have errors. You have errors that do not affect the agreement of the trial balance. And two, errors that affect the agreements of the trial balance. So these are the two errors that we have. Errors that affect the agreement of the trial balance and those that do not affect the agreement of the trial balance. So basically, these are the two types of errors. Under each of these errors, we have a host of what? Examples under them. So let's take the very first one, which is the errors that do not affect the agreements of the trial balance, right? Then we will look at the various samples of that, right? So we are taking the very first one, errors that do not affect the agreement of the trial balance. Under this type of error, we are gonna have one is one of the error under this one is you have error of omission. Error of omission. Error of omission basically means what? Something has been omitted. Basically means something has been omitted from the books. So as an accountant, when you are preparing your accounts, you're preparing your final accounts, your trial balance, before you prepare your trial balance, you need to do you need to prepare some accounts, some ledgers. Then you carry their closing balance to the trial balance, right? So when you have the transactions, or when the transaction occurred and you are going through creating accounts, ledger accounts, doing all that, and at the end of the day, when you get or maybe when the transaction occur and you are preparing that account and you meet one, or you meet a transaction in the transaction list, then that is when you say that an error of what? Omission has occurred. So basically, the key word here to help you define an error of omission is what? Omitted. Omitted. That's the meaning. So usually when you take your English, dictionary, you say that omitted is something that has been left out. Something that has been what? Left out, or something that has not been what? Recorded. So when you do not record a transaction in the books, you say that you have what? Committed the error of what? Commission. Right. So that's the simplest meaning of what? Error of omission. So it is when a transaction is not recorded in the books of accounts at all. So when you don't record that transaction, you say that it is what? Error of what? Omission. Or someone can say the transaction is completely not what? Recorded. So guys, how do we record such errors? Of course, these errors do not affect the agreement of the trial balance. You see, so when the transaction occurred and we don't record it, it doesn't bring any effect to our trial balance because you have not recorded it. There is no recording for this transaction, so it will not affect the agreement of the trial balance. Whether the trial balance will agree or not, it doesn't affect it. So how do we record these errors? So to correct this error, so the correction is that we are going to correct it. Corrections. So correction is that we are going to do our double entry. So you do your double entry. Do your double entry. Simple. Do your double entry. And once you do your double entry for the transaction, you are done. You have corrected this type of error. Do you get it? Once you do your double entry, you have corrected this type of error. The next error under this one is also known as what? Error of commission. 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 And error of commission too means that this is where this error occurs where correct amount is entered but in the wrong personal account. So this error occurs when we have accounts or a transaction being recorded in the wrong personal accounts, but the figure that you are going to record is correct. The figure that you are going to record is perfectly correct, but then the transaction will be recorded in the wrong personal account. And the reason why this error is occurring is that the transaction is due to what? Wrong personal accounts. And this wrong personal account could be a debtor or a creditor. And these debtors or creditors, they will have similar names. So due to their similarity of name will lead us to what? Make the error or make mistake in recording in the account. You get, so here it is wrong personal accounts. So wrong personal, the key point here is that wrong personal accounts due to what? Name similarity. So wrong personal accounts due to name similarity. So basically, if you want to define this type of error. So that it is an error which occurs when a transaction, it's an error which occurs when a transaction is recorded in the wrong personal accounts due to what? Name similarity. Where a transaction is recorded in the wrong personal account due to what? Name similarity. That's what error of commission is. And like I said, how many, so the key point here also is that how many personal accounts do we have? We have two types of personal accounts, right? We have two personal accounts, and these personal accounts is what? A data right? Errors that are made in the wrong personal accounts due to what? Name similarities. You get it? Due to what? Name similarities. So we have two types of personal accounts, and the two types of personal accounts, we have a debtor and a creditor. So it's either in the question they will give you what? Two debtors or two creditors. So let's take note. In the question, they'll give you two debtors or two creditors bearing the same or similar names. Bearing similar names. And this is where the confusion will come because they have the same names, similar, like closely related. Then their names are closely related. So it will lead to a confusion, and that will help you, that will enable you to, do that mistake. Instead of recording the wrong debtors account, you go and record in the, instead of recording in the correct debtors account, you go and record it in the wrong debtors account. And if it is two creditors, instead of correcting recording the accounts in the correct creditors accounts, you are going to record in the transaction in the wrong creditors account. So you'll be giving, so basically you will be giving either two words debtors or creditors bearing similar names. Do you get it? Bearing was similar names. So this thing can be what simplified as maybe they have the same what nature. Same nature means that they have what the same what names. But what it doesn't mean that having the same names means that the one that you are recording is the right what account. No. You need to record the transaction in the correct one. So you need to check the names very well and know that the transaction that you are recording is the account that you are supposed to record it and not the otherwise. Do you get it? So example is Example. Let's say you have a credit sale of 90 cedis. 90 cedis to Delta. Mina was posted to Delta. Mina account. A credit sale of 90 cedis to Delta Mina was posted to Delta Mina. You get it? So you see, these are two words, two debtors, two basically what debtors. They are all debtors. So they being two debtors does not mean that you can post the transaction in any of them. No, 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 no. Give what belongs to Kaiser to Kaiser. Give what belongs to God, Kaiser to Kaiser. You cannot give what belongs to someone to another person. No, no, no. Give what belongs to Kaiser. The transaction belongs to what? Mina, the one with H, and not Mina, the one without H. So posting the transaction in the second Mina will lead to what? An L, because the transaction does not belong to what? Mina without H. The transaction or the credit sales that you are making is relating towards Mina. To what? Cancel the Mina to correct this type of correction is that you are going to so that you cancel the entries from the wrong personal accounts and send it to the correct personal account. Good. So this is how you are going to illustrate it. This is how you are going to you are going to do the corrections. So we have what? You have Mina. You have Mina. You have Mina accounts. Since they are all debtors, that means their account is having a debit balance. So initially we debited what Mina, the one with what H. We debited Mina with the one without what H, 90 cedis. And this one we are seeing that it's wrong. Right? This recording is wrong. It's an error. So what do we do? If you want to correct it, if you want to correct it, you get it. If you want to correct this error, you have to cancel the entries from the wrong personal accounts and send it to the correct personal. So how do we do the double entry to correct that? We need to now come and credit the wrong account. So we have cancelled, right? Now if we credit it, there will be no balance on Mina, the wrong personal account. Then now you can go ahead and debit it. Since you have credited, the corresponding account will be debited. Now you have you have corrected it perfectly. So that's how we do the the corrections for this type of error. So this is how the double entry is going to be done for that. All right. So that's how we are going to do correct such errors. Okay. So now our third error is what we term as error of principle. Error of principle. So our third error is what's called error of principle. Error of principle. Error of principle. Okay. Wait. Error of principle. Hello guys. This type of error and error of commission sometimes confuse most students. The reason why I'm saying this is that they are all related to accounts. But then error of commission is related to personal accounts. Error of commission is related to wrong personal accounts. Wrong personal accounts. Wrong personal accounts due to name similarities. And error of principle is also related to wrong class of accounts. Wrong class of accounts. But different categories. Do you get it? Wrong class accounts. Wrong class of accounts. Wrong class of accounts. Error of principle is related to wrong class of accounts. So let's take notes the difference between error of commission and error of principle. And this error of principle, when you commit, you will say that you have violated the accounting principle. You have violated the accounting principle. That you cannot record in the wrong, a transaction in the wrong class of accounts. If the transaction belongs to what? An asset, give it to an asset and not a revenue. And this type of error means that wrong class of accounts. How does this wrong class of accounts lead to error of principle? The biblical intuition is that this wrong class of accounts, they have what? These accounts, you see, we have two classes of accounts. You have two classes of accounts. You have the real accounts and then the the nominal accounts. So we have real accounts and nominal accounts. So what then is real accounts and what then is what nominal accounts? You should know all these accounts, right? When you say real accounts is tangible assets, tangible property accounts, tangible property accounts. Examples are we have assets and liability. Okay, real account, tangible property account. They are tangible in the sense that we can what? We can feel them, we can touch them, we can see them. Tangible, something that we can feel, we can touch, we can see, can sense. Do you get it? Right. A loan is a liability. If you owe someone, the person can feel it that you owe someone. You can know that you can feel that you owe someone because there are some reactions that the person will be, doing that you are owing someone, or you yourself, you'll be doing something that will show that you owe someone. So we can feel it. And assets, you can touch assets, we can see assets. So that is why I said that real accounts are what? Tangible property accounts. Tangible property accounts. And then nominal accounts. They are also intangible. So vice versa. So intangible property accounts. Examples are what? Examples are revenue and expense. So expense and revenue. Expense and revenue. Okay, guys. So wrong class of accounts. That's the main difference between So the logic here also is that they will give you what? Either what? Two. They will give you these accounts. They'll give you what? One account will be real accounts. That account will also be what? Nominal accounts. And that will be closely related in the sense that they will give you one real account in the question. They give you one real account and one nominal account, but they will have what? The same what? Balances. And that will lead us towards something like same name, same structure or same nature, but different what? Categories. So they will give you what? Two accounts. In that two accounts, one will go for real accounts. The another will also go for nominal accounts. But what's the same was the same balances. So you'll be given what? So you'll be given what? In the question, that means that the transaction or the error is what? It's a error that will show that the error is what? Error of principle is that you will be given two accounts. Two accounts. And that is what? One for real. One will be what? One for what? One will go in for one will go for real accounts and the other nominal accounts. With the same words balances. The same balance. So the two accounts, which is what? Real accounts and nominal account, they will have the same what? Balances. That means that you have something like that is see that same what? Nature. Same nature. To explain further, I mean that they have what? The same words, the same words balances, but what? Different category. I mean it's different what? Class of accounts. So the last point is there. I mean, what you need to was, understand. The question will give you what? Two accounts. One is for what? Real account. The other is for what? Nominal accounts. But these kind of errors, they are what? They are what? They are different categories. So they'll give you two different classes of accounts, which will have the same what? Balances. You get it? So recording in the wrong class of accounts will lead you to make the mistake or the error that we are discussing. So an example is what? An example OS refers to motor van 100 cedis 100 GH was posted to motor van account. Motor van account. This is an error committed refers to motor van accounts was posted towards motor van account. Repairs towards motor van is one account, and also motor van here is also another account. So let me explain this, what this means. Repairs towards motor van is an expense. You get it? Repairs to motor van is an expense, and motor van itself is an asset. Motor van is an asset. Do you get it? And motor van is an asset. So if motor van is an asset, then basically it goes in for real accounts. Because you said that real accounts, they are tangible property accounts. And repairs being an asset, being an expense is a nominal account. But these accounts say that assets and expenses have the same balances. So posting that transaction was motor van account is an error that you have committed. So that is why they say that they have the same nature, the same balances, but all different class of accounts. So how do we record this transaction? How are we going to record these transactions? So corrections. So the corrections is that you cancel the transaction. Cancel the transaction or entry from the wrong class of accounts and push it to the correct class of accounts. Simple. So you cancel the transaction or the entry from the wrong class of accounts and push it to the correct class of accounts. That's how we are going to correct this kind of error. Okay, so guys, are we okay? So wait. That's how we correct error of principle. That's how we are going to correct error of principle. So the fourth error under errors that do not affect the agreement of the trial balance is what? Error of original entry. And basically this error of original entry is nothing but what? Wrong figure. Also, when you enter wrong figure or wrong amounts. So when you enter the wrong figure or amounts in the account, then we say that you have committed the error of original entry. Basically, the entry that you have what you have made, the entry that you have made, the double entries, they are what? They are perfectly what? Correct. But then the amounts that you use in recording or doing that entries is basically wrong. Is where the mistake is coming from. So the wrong amount entered or recorded in a transaction is what you term as what? Error of original entry. Right. So example is, so this one is just simple, pretty straightforward. So example is what? Example is instead of instead of um instead of recording 200 cedis GH cedis, you recorded, instead of recording 200 cedis, you recorded what? 10 cedis. 10 cedis. Instead of 210, you recorded 200. So let me do 201, or let me do it 10 cedis, right? So 10 cedis. These errors, they are committed in the prime boost. Right, they are committed in the what? Prime boost or the D boost. So such errors, these errors are usually committed in the D in the D boost or D or prime boost. Right, they are usually committed in the prime boost. That's what's error of original entries. The amount that you entered in the account is wrong, basically wrong. Basically, it is wrong. It is wrong. That's what's error of original entry. Okay. So example is that you paid rent 350. Rent paid 350 was recorded in the books as what? 500. So when you pay what? So when you pay paid rent. So when rent paid 350 was recorded in the books as 500 for both the credit and or debit entries. They recorded 500. So when you pay rent, you see, we use what? Cash book to what? Make payment. Cash book is a day book and also a ledger. You get, so when you always, that cash book, they are used for receiving cash and receipts, cash and receipts, right? They are used for receiving cash and also making payments. So when you are making payments, basically you know that you are using your cash. Do you get it? Or your bank. You use bank and cash towards do payments and also receive payments. So now the recording is that in recording, right? So in recording, this is what you did. In recording, you did what? You recorded. In recording, you debited. So in recording, let me use pencil to do the better explanation. So you see we have rent. So we see rent accounts. Rent accounts. Rent accounts, right? You are paying rent, right? And then cash accounts. So let's say let me use cash. You can also maybe get bank account or something for the payment, but let's use cash for the exercise. Cash is making the payment. So if cash is making the payment, you say that credit the giver, debit the receiver, right? So we credited what 500 in the cash account, and we debited what, right? We debited what rent 500. Right. This one is in respect of what? Cash, right? So this one is in respect of what? Cash, right? Nicely. So you get it. So how are we going to, and this one too is what in respect of what? Rent. We credited what? 500. So how do we correct this error? Now we need to find the difference and then record at the opposite side. So you are going to what? Find the difference between, so you are going to find the difference between the original figure, the one we are supposed to what? Recorded instead. So when you find the difference between 500 and 350, that means that we have over recorded, there's what? Over, there's 150 which has been what? Recorded more than the what? The original what figure. The original figure is 350, not 500. So need to what? Reduce the accounts that you have recorded, the transaction that you have recorded. You are going to what? Reduce them by what? By 150. So in doing that, so let me write the correction for us to in our books. So we are going to what? So okay, you let me do the illustration after. So you are going to what? Reduce the accounts by what? 150. So in doing that, you say that you credit what? You credit the rent by what? You are using the same accounts, you offset it. You offset the two accounts. You offset the two accounts by what? 150. Great. So 150 be done here, and then 150 will also be done here. You debit cash 150. So that at the end of the day, when you balance these accounts, you are going to get what? The 350 at the end of the day. You get it? You have corrected it. You get it? So this is how we correct this kind of what error. This how correct this kind of what error. It is not difficult. Error correction is very simple, very simple. You need to know your accounts and their balances. That is all. That's all the work that you need to what you need to what do. So at the end of the day, we are going to say that the credit side of the rent account will be what? Will be less. So the closing balance will be what? The balance CD will be what? Here. Balance CD will be what? Will be here. Balance CD. I'll just shorten it down. So 350 will be here. And which will be brought forward to the debit side so that you get the normal balance of what rents, which is what a debit balance. So balance what? Balance CBD. So balance what? Plus forward will come here as 350. Now we have gotten the 350 when that was paid, right? Great. And here too, we see that the balance will be on the what? On the debit side. 350 will be here. So that to balance the accounts, right? Then you bring that's what balance. This is the closing balance CD, right? CD be here, and then the BD, the balance BD will be what will also be on the credit side, right? And then the 350 will also come down as usual for payments, right? So this is how we correct error of original entry. This is how we correct error of original entry. This is how we correct error of original entry. Right, so 500, 500, 500. Right. So guys, this is how you should always correct your error of what original entry. Hope it is perfectly explained. Great. So we are moving on to the next one. And the next one is nothing but error of complete reversal of what entry. Complete reversal of what entry. Error of complete reversal of what entry. Error of what? Error of complete reversal of entry. Okay. Error of complete reversal of entry. Sorry. Error of complete reversal of entry. Basically, this error is how should I even say it? So reversal means was opposite, right? Reversal. So the key word here in the meaning in the error is what reversal. So reversal means what? Reversal means something is what opposite, has been tilted, opposite. Turn upside down. Turn what? Upside down. So when you reverse a transaction, the recording of a transaction, or when you record a transaction in the opposite entry, of the accounts. You know, basically in every account, you have the debit and the credit side, right? And that accounts will either have what? Either a credit balance or a debit balance. So if an account has a debit balance, like for instance, we know that me sales, right? On a normal instance, sales has a credit balance. You get it? Sales has a credit balance. So sales having a credit balance, and maybe you have a transaction that is related to what sales, credit sales, and then you debit immediately. You debit in the sales accounts. You say that you have committed error of complete reversal, because originally what we know is that sales has a credit balance. So you debiting sales accounts, you have committed error of complete reversal of entry. You have committed error of complete reversal of entry. So that is what error of complete reversal of entry means. So instead of what you debiting the account, instead of you crediting the account, you debited the account. Opposite side of the account. So when you record at the opposite side of the accounts, you have. So when you record at the opposite side of the account, you have committed error of complete reversal of entry. Okay. Okay. So as usual, let me give you an example to simplify the points, make it clear for you to understand. So example is a of payment of a payment of 7,000 cedis to a creditor, a creditor Asibre was credited was credited a payment of 700 to a creditor I'm coming. So a payment of 7,000 Ghana cedis to a creditor was credited to Asibre and and debited to cash. A payment of 7,000 Ghana cedis to a creditor was credited to what? The Asibre and debited to cash book. So here, ask yourself, who is doing the payments and who is receiving the payments? Who is what? Receiving the payments and who is what? Making the payment. So just ask yourself, who is what? Receiving the payments. So who is that? Who is receiving the payments? Of course, the one receiving the payment is what? The creditor. Dasibre is receiving the payment. Dasibre is receiving the payment. Right? And who is making the payments? Cash book. Cash book is making payment. So if cash book is making payment, then we need to what? Credit cash book. And if Dasibre is the one receiving, we need to what? Debit Dasibre. But what did we do? We do the opposite. We did the opposite. We did the what? The opposite. So guys, so we can see, you can see we have done the opposite. We have reversed the transaction. That's what we can see now. To get it. So we need to cancel the transaction. So we need to what? Correct it. How do we correct it? So correction will be what? Correction. We need to cancel. We need to what? Now the correction is that we are going to what? Double. So guys, we are going to double the entry. The entry on the opposite. On the opposite sides to correct the error. You are going to double the entry. Going to double the entries. You are going to double the entries on the opposite sides of the account, of the two accounts, of the two accounts to correct the error. So basically, this is what I mean. Let me bring my pencil and illustrate it. So we have Dasibre, right? So let me do it. Dasibre, that's the D right here, and the cash book as what? CB. I'll do cash book as what? CB. Need to understand it. What I mean, right? So from the question, we debited what? Cash, right? So we debited cash. And this is Dasibre. So Dasibre, and we debited cash. 7,000. Right. 7 what key? Alright, 7 key. Simple one. And we said that we credited what? Dasibre with what? 7,000. So cash, as usual, see cash book. Then I debited Dasibre. I credited Dasibre, sorry. I credited Dasibre. We decredited Dasibre. Oh, why is this doing that? So the credited Dasibre with cash book CB, and they credited Dasibre 7 key. Right. So to correct it, to cancel the error, we said that we should what? Double the entries. on the opposite side of the two accounts to correct the error. So the opposite side of the entry. So what you have done initially to correct it, you go to the opposite side and double the what entries, right? So double the entries. So the entries we have recorded was 7K at the wrong side. So we are going to double the entry. So here that's where you are going to what debit that's with cash book 14. If we have 7K and you want the double amount of 7K is what 14K. 14 what K. Okay. And then you also say you debit cash book with what? The name of that 14 what K. 14K. Now we have we have corrected it. Now if we balance these accounts, when you balance it, the total will be what 14K. 14 what K. 14K. And you do this to 14 what K. 14 what K. Here to the same 14K. 14K the biggest amount, 14K. And here to same to 14 what K. Now the credits, the balance CD will come towards the credit side because it is there was it is the lowest. So 7K will come here. Then the right here to the balance CD will come here. Right. The balance CD will also come here. The balance CD will also come to the debit side of the cash book. At the end of the day, see that the debit side will come toward the credit side. And the same goes in for the Darcy 7K will come here. So now we have Darcy being debited with 7K and cash book being credited with 7K. So this is how we do towards correct error of complete reversal of what's entry. So guys, have you seen the difference between error of complete reversal of entry and error of original entry? So let's take notes of the two differences so that we will not confuse ourselves with them. Now we go to the seat what error, the seat error, which is the error of transposition, error of transposition, error of transposition. Error of transposition means something as what turn what? Upside down. So upside down. So when you transpose a transaction, you transpose a figure. So this transposition is due to what? The numbers that we are going to what? Record. When you transpose the number, then you say that you have turned the number of the figures upside down. So this error is due to what? The misplacement of the the arrangements of the figures, or that is wrong sequence of accounts or amounts in a number. So basically, you are seeing that the wrong sequence of the wrong sequence of amounts or figures used to record a transaction. Wrong sequence of amounts or figures in numbers used to record a transaction. So when you turn, so the key point is a what? Turn upside down. Upside down. So when you turn a number upside down, right, you have misplaced the arrangement of the characters in the what? In the number, in a certain number, right? A certain, you have changed the sequence of the number or the amount. You have changed it. That is what we call the what? The error. So example is what? Example. An example is instead of instead of instead of recording instead of recording what instead of recording 1 2 3, you was recorded recorded 2 1 3 rather. So we see that is what we term as what? Error of transpose. You have turned the number upside down. 1 2 3, and you have recorded. You see, you have turned the number upside down. Do you see? You have turned the number upside down. Okay. Okay, so this is how we are going to correct this error of transposition. So to correct this error, we are going to what? So you find the difference between the original amount and the correct amount. So the difference between the 1 2 3 and the 2 1 3 is what? 90. So the amount that we recorded is more than the original amount by what? 90. So you reverse the wrong entries, right? You have to reverse so transposition. For transposition, we have two ways in which we can record it, right? So when an account is being transposed, we have two ways that we can we record it. So the correction is that we have for two ways. Correction is we have for two approaches. So two methods. Two methods. The two methods is that one, you reverse the wrong entry. So reverse the wrong what entries, and push the correct what once. Or if you don't like this method, you can use this method. The second method I'm coming to write. Find the what? Find the difference. Find the difference. That's what usually most people do. Difference. You find a difference between the what we were supposed to record and what we recorded, right? The difference between them. And the difference could be what? Whether a shortfall or a more. It could be what? Lesser than the original amount, or it could be what? More than the original amount. Then we now pass the correct entries. Then pass the correct what entries. So guys, these are the two what methods that we can use to what correct error of transposition. Now I want to go back to what error of what complete reversal of entry. Sometimes for error of complete reversal of entry, the error can be committed in what? In one account only. And if that happens, right? So when the error of complete reversal of entries, the error of complete reversal of entry happens to us occur in only one account, then we have what? Error of what? Partial reversal. Then in that case, the trial balance will not agree because it is partial. The error was committed in only one account. But when there is what? Complete reversal of entry, then the trial balance will agree. But when there is what? Error of partial reversal. So let me put it here. Notes when the reversal is done in respect of only one account. The is a partial reversal. And for that, the trial balance, the trial balance will not agree with the trial balance will not agree. But for complete reversal of entry, the trial balance will agree. But for this partial reversal, the trial balance will not agree. So when you get to what errors that do not that affect the trial balance, you also talk about what partial reversal. So this partial reversal of entry is also an example of what errors that's what affect the trial balance. So let's take note of that. Okay, so that will be the end of the errors that do not affect the agreement of the trial balance. Okay, now we are moving on to what errors that's affect that affect the agreement of the trial balance. Under this error, we are going to look at those errors that affect the agreement of the trial balance. So the first one is what? We have single entry. Single entry. Of course, single entry will affect the agreement of the trial balance. You see that when we were looking at the errors that will not affect the agreement of the trial balance, we did not what? Open what? So to add to that, errors that do not affect the agreement of the trial balance, we don't open suspense accounts because they don't affect the trial balance. So there's no way we are going to open a suspense account. But for errors that affect the agreement of the trial balance, hell yes, you are going to what? Open a suspense account to correct the error. So in this type of error, the second type of error that we are going to treat, we are going to open trial suspense accounts to correct or to carry on with the double entry, right? So single entry is one of the errors that when we commit, we are going to find some discrepancies in the trial balance, right? So in that case, the trial balance will not agree. A single entry is when one part, so when one part of a transaction is what? When one part of a transaction was what? Was recorded. But the other was not recorded. Do you get it? Only one entry was omitted. Only one entry. That is only what? One entry was omitted. And the very first one that we look at, and the errors that do not affect the agreement of the trial balance, is that I said that error of omission. Error of omission is where the two entries were omitted, were completely omitted. But this error of single entry means that only one entry was omitted. The other was not omitted, was recorded. So if one was recorded and one was not recorded, then we should expect that the trial balance will not agree. It will affect our trial balance. So, and you know that every transaction, we have two items or two accounts that should, be involved. So correction is that you record the omitted transaction, then you post the corresponding side of the entry to a suspense account. So correction is that correction, this is how we are going to correct single entry, right? So we record the omitted record the omitted transaction and send the corresponding entry to a suspense account. So that is why we say that in this type of error, suspense account is what? Is a must. Always you are going to open a suspense account and record the corresponding entry to there. So right, so that's what you need to know. And the errors that affect the agreement of the trial balance. So we are going to open a suspense and record the corresponding entry in the suspense account. Now the second type of error, which also affect the agreement of the trial balance, is what? Partial reversal of entry. So as I said, partial reversal of entry affect the agreement of the trial balance. So here it is either two, we have two debits, or two credits for one transaction. Partial reversal of entry is that one account, we can record one account, one transaction, right? So one transaction, we can do two debits or two credits for one account, for one transaction. You know that every transaction we must do debit and credits. But instead, so normally So normally in every transaction we have a debit, one account being debit. In every transaction we have one account being what? Debited, and the other accounts being credited. But instead of that, in partial reversal, we either do two debits, or two what? Credits for a single transaction. That means that the two accounts involved, we are going to what? Either credit, or we are going to what? Either debit. And that will lead us towards commit partial reversal of entry. So literally or biblically, I mean that only one account will experience that error. The other will be right. One account will be what? Correct, but the other account will experience the error. And so that account that will be affected or be having that error, we are going to what? Correct it. Then you send the corresponding account to what? A suspense account. Do you get this? So if you have two debits, the account that is affected will have to be what? You double the amount on the affected what? Account. So correction is this. Correction. Double the amount at the opposite side of the double the amount at the opposite side. Double the amount at the opposite side of the affected what? Accounts, and send the corresponding entry to suspense accounts. Double the amount at the opposite side of the affected accounts and send the corresponding entry to suspense account. So the account that will be affected, we are going to double the amount at the opposite side. So if the account was supposed to be maybe, let's say if the account was supposed to be what? Credited, and we debited instead. You debit the accounts, that particular account that is affected, that is experiencing or is having that effect. You go and debit it, but we have to double the amount. If we credited 50 cedis, now if you are doing the correction, you what? If you credited 50 cedis, now if you are doing the correction, you debit what? 100. So when you debit 100, you knew that then you are going to have 100 on that account. Closing balance of that account will be 100. Now you send 100 to a suspense account and what? And credits suspense. So that is how we correct error of partial reversal. That's how we correct error of partial reversal. Okay. Then we also have what? We have casting errors. You have casting errors. Under casting errors, you have two types of errors. You have overcast. You have overcast. Overcast means that you have added. Over adding. So when you overcast means that you have over added, right? And undercast. Undercast. Overcast means under what? Undercast means over subtracting. Over subtracting. Over adding and over subtracting. Over adding and over what? Subtracting over deduction. So how do we correct such errors when they occur? Casting errors. Okay, so this is the corrections for this kind of words error. So corrections for overcast and errors undercast. Now the underlying principles for casting error is that when we are going to correct it, we have two situations. You get it? You have two situations. Now, if the account involved has a debit balance, right? If the account, so there are two scenarios. So correction is that we have for two was cases. There are two cases. There are two cases for correcting correcting casting errors. Casting errors. 1. If the account has a debit balance, how do we correct? If the account has a debit balance, how do we correct whether the accounts involved has a debit balance? How do we correct when the error is what? An overcast. When an overcast, if overcast, if the account has a debit balance, how do we correct that account when we undercast? When we undercast that account, to correct it, we debit it. That means to say we add. The account has a debit balance and we have what? Undercast. We have over. Undercast means that we have what? Over subtracted. Right? So if the account has a debit balance and we have committed an undercast, we have less added. So less added means that we have to what? Add it back. So you have to add. Here is what? Over deduction. So we add it back, and when we overcast, what do we do instead? So an overcast, we credit it, subtract, right? Subtract. The second scenario is that if the account has a credit balance, how do we correct how do we correct how do we correct how do we correct an undercast? To correct an undercast when the account has a credit balance, right? You are going to credit it. You are going to credit it. Going to credit it. Right? The account has a credit balance, and the account has a credit balance, and we have undercast. you have less subtracted. So we have to credit it to subtract the amount we need to subtract to meet the demands of the what, the figure, the subtraction. And how do you also correct? How do we correct an overcast if the account has a credit balance? We debit it, right? The account has a credit balance and we have overcast. So we debit it. So as to whether you debit or you credit, you first have to know the balance of the account. You get it? You have to know the balance of the accounts. And if it is having a debit balance and you undercast, you need to, if the account has a debit balance and you undercast, you debit the account. But if you overcast, you credit it. If the account also has a credit balance and the error is an undercast, you credit it. So always, if the account is debit balance or credit balance and the error is what, an undercast, you use the original balance to correct that error. If the account is what, a debit balance and or maybe a credit balance and the error is an undercast, use the same balance of the account to do the corrections. But if it is an overcast, you post it to the other side of the account. You get it? So these are the two ways or the two scenarios, cases where we can correct casting errors. Now we create, now we need to what? We are done with the what? Errors that affect the agreement of the trial balance. So the first one we did is what? A single entry. And we move on to what? Partial reversal of entry. Right? Partial reversal of entry. Then we came down to what? Casting errors. So under the errors that affect the trial balance, we have what? Single entry, partial reversal of entry, and casting errors. The casting errors, we can have an overcast or what? An undercast. And guys, take very good note of how to what? Correct the casting errors, because they are usually confusing. They are very confusing. So in sum up, when you are correcting errors that do not affect the agreement of the trial balance, we say that we do not open a suspense, because those errors, they don't bring any discrepancies in the trial balance not agreeing. So there is no problem about we creating accounts. We just do some, just open the account, then we set off the difference between them. But those errors that affect the agreement of the trial balance, when we are correcting them, a suspense account will be involved. You have to bring in a suspense account to serve as a mediator. They get this to serve as a mediator to help us, correct that errors. The suspense account is recorded depending on the nature of the transaction. That is right. There is no particular format for preparing the suspense account. The trial balance will be open and recorded depending on the nature of the transaction. To the trial balance, the suspense account, we can debit it, we can credit it. And that trial balance, when we are preparing, this is how we are going to prepare the trial balance, the suspense account. Sorry, this is how we are going to prepare the for preparing the trial and the suspense accounts, we cannot have two balances in the suspense accounts. It's either they will give us some of the issues that happen in the suspense account is that sometimes a question will not give you the balance for you to use in preparing the suspense accounts. So in that case, I will advise that you do all the recordings that is supposed to be done in the suspense accounts. Once you are done and you are confidently that you have done the right the right recordings and everything. Now you find the difference between the debit and the credit side of the suspense account. Then the balance on the lesser side will be taken as the opening balance of that, or the difference in the trial balance. You get this? Now, sometimes a question will not give you the difference in the trial balance for you to use as the closing balance or the difference in the trial balance, right? So in that case, do all the recordings that is supposed to be done in the suspense accounts. Once you are done, you have balance of the accounts and you have find the difference, and you say that okay, the difference is at the credit side. Then that difference will become your closing balance, because the suspense account is a self balancing account. You are not going to get any carry down or brought down. No. There is no account that you are going to you are going to get after the end of your preparation of the trial your balance, your preparation of the so this is how we are going to prepare our trial balance. So this is how we are going to prepare our suspense accounts. Suspense accounts. Right. So our suspense accounts. So always the difference will be here. Difference in what? Trial balance. then you record that. You record that. Or it could be a debit, or the difference, they can give you a difference in the trial balance to be on the debit side of the trial balance or credit side of the trial balance. So if the question give you a difference that the difference in the trial balance is on the debit side, then you bring it at the debit side of the suspense. If they give you the difference in the trial balance on the credit side, then you bring it at the credit side of the suspense account, right? So that's what you need to know. And you call that too. But in some cases, a question will not give you any difference. The difference in the trial balance will be silence. In that case, please please do all the recordings in the suspense account. All the account that is supposed to be recording the suspense account, do it. When you are done, balance of the accounts, the difference in the suspense account will be the difference in the trial balance. So that's how we are going to work. So it can be the credit side or the debit side, but we will not have two balances or two difference on the debit side and the credit side of the suspense. Only one side will be what will have the difference in the trial balance. Then, so I don't want to fill in this account with some accounts, because as I said, the suspense accounts does not have any particular formats that you need to follow towards prepare your suspense accounts, right? So I don't want to fill in, but the difference I can tell you, okay, it can be on the credit side of the suspense account or the debit side of the suspense accounts, but the rest of the account that will be posted in these accounts can be at either side of a suspense account. You get it? So basically, this is how you need to work. At the end of the day, the suspense account should balance. So at the end of the day, at the end of the day, the suspense accounts should balance, because the suspense accounts in itself is a self-balancing account, right? It's a self-balancing account. So if at the end of the day your trial balance does not agree, then that means that you have done mistake. There is something that you have committed which is causing that thing not making your trial balance agree. So now that you have some question will tell you or ask you to prepare an adjusted net profits, right? An adjusted net profits. So in that case, you need to prepare do some corrections sorts to prepare that adjusted net profit. Okay, so to prepare your adjusted net profit or do correction of to correct the net profits of the accounts, we are going to take only errors which affect the trial balance. Only errors which affect the trial balance are used in correcting the net profit. Right, so we have corrections of what? Corrections of net profit. Because you see, when there is what? Errors in the trial balance such that the trial balance do not agree, it is going to affect our what? Our trial balance. So errors that affect the trial balance agreement will, obviously affect our net profits. When you prepare the income statement and the balance sheet, when you prepare the income statement, is going to what? Affect our net profits. So in that case, to correct the net profits, you are going to use the errors that affected the trial balance to correct the net profit. Do you get it? Now here there is an inverse relationship between profit, the net profits, and errors that affects the trial balance agreements. So one thing that you need to know when you are correcting the net profit is that only errors that affect the trial balance are used to correct the net profit. But only errors that affect the agreement of the trial balance are used to correct the net profit. Now the rule is that to do the double entries and all that to correct that errors, this is the underlying rule. So rule: if the error if the transaction decrease the so this transaction could be the error that's the transaction or the error decrease the profit. What do? You add it toward the net profit. You add that transaction towards the net profit. Right? Add it to the net profit. And 2, if the error or transaction increase the profit, subtract it from the net profit. So this is the rule that we are going to use to prepare our adjusted net profit, to prepare the corrections of errors. Now Now you say that you create let me create a column and let's do that quickly. So you say adjusted what? Adjusted net profit, right? For the year, end ended. Then yeah. Adjusted net profit for the year ended. Then you record your net profit net profit. Okay. Drafts accounts or net profit per the income statement, right? Then you bring your this thing here. So okay, I'm coming. Let me clear this. Yeah, your currency signs here. So this one will be your currency sign. And that's also be your currency sign. All right, yeah, then net profit will come here. So the net profit per the income statement, you write it and then bring it here. But then you come down to then you come it down to what? Then The next thing is what? You add, going to add errors. The errors you are going to what? Add errors that increase. You say that, so when the what? The error decrease profits, you add. So we say we add errors. That's what? Add errors that increase profits. The error that increase these profits. Errors that increase error that decrease these profits, you what? You add. So this here is what? Decrease. Errors that what? Add errors that decrease profit. This profit. Those that increase the profit, you add them. Right. Okay. So you are going to what? Add. So if let me bring it down so that I can continue from there. And the space is very, very little. So add errors that decrease net profit. So let's say we have income. So example of error that decrease profit, or income or income or revenue was undercast. So when you have income or revenue was undercast, these words will decrease your profit, because your income, when you undercast it, you less add your words, your income, you are going to what? Decrease your profit. So you bring it here, you bring it here, we call it here, and then you have what? Costs or expenses overcast. So when you overcast your expenses or your costs, you also, that stated, you also, this one will also expenses overstated will also decrease your what? Your profits, because the more expenses you incur, the less profit that you have. So when you add this, then you come and bring the totals here. You get it? You bring the totals here. Bring the totals here. Okay. Then the next thing you need to also consider is what? You consider errors that also increase profits. You see, errors that's what? Increase what? Errors that's what? Increase profits. Errors that's what? Increase what? Profit. That's what? Subtract. So you less errors that increase profit. You less it. Errors that increase profits. You less them. So you list all the errors that will what? Will increase your profits. Right. You list all of them. So you list all of them here. So example is what? Revenue or income, revenue or income was over. So when you overstate, you add your incomes, it will increase your what? Your profits. So in that case, you said I should what? Less it. Right? You're going to what? Less it. You less it in a bracket, right? You less it in a bracket. So you less it from your. So you also have an example of that will also increase your profit is what? Cost or expenses, what? Undercast. So when you undercast your expenses, those um those will also increase your what do you call it? Your profit, right? To also increase your profit. So you also less that. So the difference, you write it here, and this will be your adjusted net profit. This will be called your adjusted what, or corrected what. You can say adjusted net profit or corrected what, net profit for the period. Then you are done. So this is how we correct the income statement or balance. So one thing you need to know is that when you have what, debtors and creditors, we don't include them in the trial balance, in the net profit adjustments. So guys, this is all for our lecture on what, suspense account and error corrections. Okay, this is all for the lecture on suspense account and error correction. So as you can see, we have dealt with all the areas, the things that you need. So then again, to restate what I earlier said, we have two types of errors. We have those errors that affect the agreement of the trial balance, and those that do not affect the agreement of the trial balance. Those that do not affect the agreement of the trial balance, we have error of omission, error of commission, error of principle, error of complete reversal of entry, error of complete, error of original entry, transposition error, right? And those that affect the trial balance agreement, we have casting errors, single entry, partial reversal of entry, and those that affect, we said that when we are correcting them, we need to create a temporal account to help us reconcile the difference between the trial balance, right? So in that case, you need to open a trial balance, the suspense accounts. That will help us to reconcile the difference in the trial balance. And the difference in the trial balance will be used in the suspense accounts to correct those errors. So in the trial balance, If the trial balance, the difference is at the credit side, you bring the difference in the credit side of the suspense account. If in the trial balance, the difference is at the debit side, you bring the difference at the debit side of the suspense account. But in some cases, the question will not give you the difference in the trial balance in the question. It will be all silence. So in that case, what you have to do is that you need to do all the recordings in the suspense accounts. I mean, those errors that affect the corresponding account that will be opening the suspense account will have to be what recorded in the suspense. Once you are done, balance the suspense account, because the suspense account is that it is a self-balancing account. So you need to balance the account so that you find a short shortfall of this two side, whether the credit side or debit side is short amount, is having a short amount, or this that short amount, the difference in the side that is what the lower will be the difference that was supposed to be at the trial balance that they didn't mention in the question. So you use it at what the difference in the suspense accounts, so that the account can balance, because the suspense account must balance at the end of the day. It must balance. So guys, this is all that I have for you. I wish you all in your studies. I know that with this one you will be able to solve any questions in under suspense accounts and error error corrections. Yeah. So thank you, and make sure you subscribe, like, comment, share with your colleagues to also have a benefit in this recordings, right? Thank you. See you in my last episode, right? Thank you. So until then, see you. Bye bye for now.